Hi everyone. Today is Tuesday, February the 18th, and this is the Moneyball Morning Report for the Benzinga Pro platform. My name is Anne-Marie Band. We're going to start by looking at the E-Mini S&P this morning. I did do a video yesterday that was quick. It's actually inside of the YouTube channel if you want to see what the weekly and monthlies, the weeklies look like here. We are coming into options expiration week, and there is a lot of volatility showing up on the horizon. We have to be a little bit careful today. As we stare down the hourly chart, we can clearly see that there is buying pressure underneath. That is not changed. So dips are buy zones. Why? Because the Keltner band is dipping down over the current space. That tells us that we likely have resistance sitting here at 61.50. If we break out, 61.60 is next, and then we've got 61.76. Where are the ideal buy points today? Intraday, what we really have to stare down is what does the opening candlestick formation tell us from yesterday? Because we did have an abbreviated day yesterday. That opening candlestick formation sits at the high of 61.45. That's where the buyers seem to come in. That might be a good support floor with 61.47 as the particular buy zone we are looking at. So where might we extend to? We had a big bounce at 1 a.m. Not really sure why we have that right there, but that candlestick is pretty important. We are trying to breach it. That level is above that 61.54. We do have a lot of option activity sitting around that zone. And so it should be a little bit of a fight club, but momentum tells me that there are still sellers up here. So I like the short off of this action. Full disclosure, I am short right at around this 61.55. And I'm looking for 61.47 to cover this particular trade. Pardon me. Allergies starting to kick in. Let's take a look at the NQ. NQ doing the same sort of thing. Grinding higher. Definitely. Keltner band definitely showing upside pressure. But we have a divergent pattern here with momentum telling us we're looking for support. That support looks to be the high of the opening candle on last night's version, right, at 6 p.m. That's 22,230-ish. That's also my target for this short that I have engaged from, let me see where I got short here, 22,294. So still dancing around that zone, but I suspect we should have ourselves a little bit of a pullback. So what should happen if our price action remains overall bullish is that we find some support at this 22,230 zone. The stopping area is not until about 22,195. So the risk is a bit higher here. If you decide to go long at 22,234, I would wait to see behavior. We do see the buyers coming in at this particular moving average currently. And so that still looks like a pretty nice space for us to hang out for on a particular buy zone. If we crest, I think it's going to be another rise into 22,350. There's a gamma line up there. Traders clearly buying the price action as it moves up. My thought is shorts are going to try to do something here in the near term, especially as we go into expiration week. Volume continues to be very thin, and we'll see what happens as the price action opens for the market, but I like that short. Let's take a look at the YM. This is the E-Mini Dow. Much more sideways. See the Keltner bands much more sideways. And so we are looking at bounces that sell near 44,800 and dips that buy. So what is the dip action? Last time we did a video looked like about this line, and this is the VWAP on the close of Thursday, looking like support. That's 44,600 or so. If, per happenstance, we don't hold this level, we're here all the way back to the point of control. My thought is that we should be a little bit sideways in general from this space. I am going to take some profit here for that short as it continues. Just give myself a little bit of room and then bring my stop down in the other space. All right, so back to business. I love trading pre-market. It's very quiet. The motion is nice and steady. And especially if you trade the NQs, turn out to have some really nice things just before the noisy patches move up. And we are scheduled to have a noisy patch in just a little bit with, let's see what's coming out today. We've got Empire State Manufacturing at 8:30 Eastern, the housing market index at 10, but that's about it. We do have FOMC minutes and housing starts and permits tomorrow. I have no idea what those things are going to do, but they should do something in this arena of volatility. Okay, so that being said, the go, no-go line, 44,600, that's the key support area. If we lose this edge, 44,560 and then 44,500, we should stay fairly sideways, however. Let's take a look at Bitcoin. Micro Bitcoin, very sideways. Now, this likely means that a lot of the altcoins are really drifting south. That's my gut. Now, this hourly formation that came down into the low at 95,000 had a really solid bounce for about 1,500 here. Look at the slope of the Keltner. Downward motion from above, flattening motion from below. Bases are still trying to build here. If you're looking to go long Bitcoin, it's better to wait for support action that stabilizes so you can give yourself a little bit of cushion on your risk. Notice, here they try to lift. Here's the look below and fail. And then there's the buy zone. Again, that happens on any time frame. Daily, weekly, monthly, 15 minutes, 1 minute, all the same when price action takes a turn in large part. Okay? Edges above, 98,000, looking to be a little bit more like resistance these days. This downward trending pattern is not to be ignored. High, lower high, lower high, another lower high. Low, lower low, lower low, another lower low. So my suspicion is that we keep dribbling down into these lower areas as Bitcoin tries to stabilize. Let's take a look at oil. Now, as you know, I'm pretty bearish on oil. Saw a very interesting article this morning. It said that one of the shadow tankers that Russia has been using to transport illegal oil from the sanctions headed to Europe somewhere was caught, attacked. I don't know what word to use right there, right? But something did happen, certainly. And the market continues to bring down, right? So the underlying systemic feeling of the commodity technical advisors, which are the groups that people watch in the commodity space positioning, they are suggesting that we are still caught in this very wide range. So 72, as I mentioned, I know I sound like a broken record. 72, as long as it rejects, we should head back to 70.50, right? That's my thought, to keep us landlocked in this space. So if you're looking for longs, areas around that 70.20, to 70.50 look pretty good to me at this juncture. Lower highs and lower lows on the hourly doesn't work out. Again, here we go. Look above. There's the line in the sand, 72. It looks above and fails, and that look above and fail at that key line gives us the breakdown into prior support. Where might we see oil move today? No clue, but my best supposition at this time would be if we can't hold these buyers, notice, resistance becomes support. They're about 71.17. So there are going to be some buyers try to come in here, but the bounce is still 71.50. Looks like a short to me, right? The bounce into the area and the stop would only be about 20 cents wide. So that looks pretty good if, you're thinking about oil doing the same thing that it's been doing. Let's take a look at gold. Let me make sure I'm on the right contract here. 29.29. Yep. So what did gold do? Bounced off 28.87. That's been a sweet spot lately. I mean, absolutely beautiful. If you don't want to buy gold itself and you're trading the futures and you're like, oh, I don't want to stay up all night looking at this, then you could easily say to yourself, I'm going to put a micro Bitcoin on and, a micro gold on, and then just run it into resistance. What's that resistance zone? Well, right now, it's 29.32. The bigger picture, if we take a look at gold, a topping formation up here at 29.60, starting with here's a high, here's the low, here's the same high getting tested. Actually, it's a little bit of a lower high. Here's the same low getting tested. My thought is it's consolidating into these lower edges. So dips are buys. Notice how congested, and we'd be going tremendously counter trend because trend is up, momentum is up, but it is very high. And so that usually tells us we're going to come down into support. I like the area at around 29.06. If it doesn't hold that zone, don't hang on because I'm pretty sure it'll head back to 28.87. If, per happenstance, it pulls back and holds the VWAP congestion at 29.23, there is a long there if you've got your support right there at the old resistance zone. So let's say you don't trade the futures, but you watch. I don't know why you would watch if you don't trade the futures, but there is a reason to watch, and that is the following. All of these patterns that we see here in the futures, we can find them in any stock that is liquid. You'll see that the formations are just textbook. Old resistance becomes new support. Notice we don't test it because the moving averages become the support area. That'll happen in all of the charts that you look at. Let's take a peek at SPY. Trending higher, folks. A lot of people chasing the bull train. I will say on a side note, we've seen a lot of motion in China. China stocks just moving savagely up. There's a lot of short covering there. So there could be some very pretty squeezes into the formations there. But you want to be super careful because I do not believe that is new buying. I believe that that is short covering, forcing price action up. And there might be a little bit of that here because the volume continues to be incredibly tepid. All right, so what are we staring down? Bullish formations. We're very far away from these moving averages that we normally sit fairly near when we're headed up. Is this resistance? I don't know. Let's draw a Fibonacci. Right now, I have 610 as the breakaway space. So let's take a look at the last major wave. Okay, so here it is from the high on Feb 7 at 607. Whoopsie. Operator error. To the low on February the 12th. Here we are headed up to 613 and then 614. Would not be surprised if we have those numbers come in. Truly would not be surprised. So what are we staring down? Well, we're staring down price action that's congested. It's telling us that the dips are buys. Notice the slope of the Keltner band up on above us and below us. So pullbacks might be a little shallow here if this continues. So what do we want to stare down? Am I holding my base here? So as long as we hold 611, price action should continue really sharply to the upside, or a grinding motion to the upside is probably the better thing for me to say, simply because price action is retracing itself lately. So 611 base, if it does not form a bounce zone here, easily yesterday's closing VWAP at 610, and then my line that I'm looking for, which is about this 609. 607 is the breakout zone. So if this doesn't hold, I'm going to clip that short and get out. I am really glad I covered most of that short in the NQ because it is bouncing. So is the ES. All right, let's go to the Qs. This very sharp fade that I saw happening in the indices was the reason that I said, I think I am going to cover that short. And that sort of thing is just something that I look at because I think that's a liquidation event. All right, so here we are. What's the floor? 537, I think, is the space that I would say buyers get excited. We certainly could see them getting excited here at 537.75. Moving up past 540, let's see where the Fibonacci takes us. 543 is a Fibonacci, but let's redraw this breakaway for the Qs. And let's take the high of February 7. Same measure in the Qs as the SPY, to February 12th. And that gives us right around that 543 area, 543.50, 543.30, something like that. Pullbacks are buy zones, most definitely. We got a little bit of a kink in the Keltner band based on this sharp fade, but every little kink has been bought. So look for more upside pressure. Look at this, right? Don't ever believe that when a momentum event moves all the way up here, that it's telling you the market's going to roll over. Never. That's the wrong way to read this indicator. You look at the indicator first, and then you go to trend. If trend is up and the momentum is high, dips are going to be likely shallow. And that's why we have not come into this deeper moving average, because we are sitting here. The moment that starts to rotate, we'll get ourselves a little bit more price action. All right, that's it for me, folks. I'll see you on the streams. Take care.